Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know that it is working. Hope everybody's having a fantastic morning so far. Hopefully your weekend was awesome. I'm looking forward to trading with you guys this morning. So let's go ahead and jump into it. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account standing if you were to lose money. Okay, guys. All right, let's go ahead and jump into this. So for the bankers close this morning, I've started small, in fact, a little less than a starter position on the euro pound long. And I'm going to explain why I'm doing this. In fact, I'm going to just add just a few more little trades here. Oops, not a sell. I want to add a buy. Couple of things. Let's actually go take a look at the euro pound on TradingView and kind of break it down. So I'm looking to go long, and I'll show you what's going on over here. Okay, so this morning we had a nice move up from this low down here. This is on a 15-minute chart. Markets come up. And it's broken a couple of different supply areas. Now it is coming up and finding some rejection up here with these tops, these old highs. So we are running into some, like I said, to some rejection there. I do think it's possible that we see a pullback into this little demand zone right here. So that is possible, just an FYI, like that could pull back about 10 pips or so before you get until you get the move upwards and a continuation to the upside. So just be aware of that could be your drawdown. So you could wait for it to come there and then buy. I'm probably going to do both. Like I said, I'm already in a smaller position long, and then I'm probably going to build in just a little bit more right at that area. But why do I like this trade? Because this morning, if you look at the pound franc, technically this would have been a setup to buy down here. And you can see it right here. Yeah, it hit the lower Bollinger Band about 10 or 15 minutes ago. My biggest concern with the pound franc is if you zoom out on the pound franc here, here's what scares me. So you have this support level right here that the market basically came into. My biggest concern is if this thing pulled back, no one's going to help you until you get all the way down to here. So there's no demand until you get into this area. And so if you get stuck in a trade on this pound franc today, not saying you can't trade it, you could trade this one long as well, because it has the traditional setup. It's got the break in the lower Bollinger Band, at the banker's close hour. This one would make sense. My biggest concern is this deep abyss down here. There's nothing in between. So we talk about these as straightaways. This is a straightaway right here, or a freeway zone, whatever you want to call it. So the market doesn't have a lot of volume in this area. Okay. And so if this market pulled below that, again, you're just in trouble. So you're not going to get help. So you might as well close the trade at a loss if that were to break down. So I'm just letting you know, whereas with the euro pound, if I get in a little bit of trouble with this one, I've got a little bit more help, right? So if I come out to this time frame, one, it's already in context of the market. The market's already pushing up, right? It's already in the momentum's to the upside. Okay. And two, I've got subsequent demand areas that are not too far away. So if I got in trouble, there's a good chance I'm going to get help from the market. Okay. So, so that's why I'm saying I'm marking up this area. Technically, you could mark up maybe this area as a small area where you could get some help as well. Yeah, actually, definitely that area. That last area right here, this area right here is where you're going to see this was the last little consolidation before breakout. Can you guys still hear my audio? It looks like Robert lost it. Can you guys still hear it? Carlos and Jared, can you guys hear me? Just wanted to check if it's still working. You can still hear me? Okay. Okay. All right, thanks, guys. All right, so yeah, anyway, that's what I'm saying is I like this trade because if anything today, ideally it just goes straight up and we hit some targets to the upside and we start making money that way. Or if worst case scenario, I really see this, I guess worst case scenario is you just flat out lose, right? That's always worst case scenario, right? But I guess the more probable worst case scenario, more probable, less favorable scenario would be that the market comes into here, into this demand area or this demand area, and then you get your move, right? So you'd be in a little bit of a drawdown first, and then you'd get your move later. So that's kind of what I would look at. Okay, so as far as take profits and stop losses go, I'm going to move these stop losses up just a little bit, not a ton though, because these are the two areas I'm thinking about working with. So I don't want to have my stop losses inside the area that I'm working in. So I'm just going to move those up just a little bit. And then as far as targets go, this one might be a little bit more difficult. Let's actually go take a look at, well, let's use Sonar Lab to see if we can find some supply, because obviously you want to take profit at supply areas. So let's go to maybe a 30-minute. They're technically saying this thing is supply. I get it. I know what they're saying. And that's why I am prepared for this to pull back a few pips. But let's see if there's anything else. Yeah, so on the 45-minute, it's all the way up here. Let's see about an hourly. There's supply up there. Honestly, probably would just book profits at this old pivot high right here if we got there. So that's like 20 pips away. And I could leave a few to ride out to that area up there. I mean, that's kind of far, but it is possible. So what is that at? That's just, let's see, this is 89 cents right here. Yeah, maybe 89, 100 would be my max target. Okay, so let's come back over here and oh, and then let me mark up where this old resistance is at 88,960. Okay, so 88,960 is where I want to take most of the profits. So like something like right there. And then we want to leave a couple of these to ride to 81 or 89, 100. So something like this. In fact, I'll just probably book most of these. I'll leave one to ride, but I'm going to book most of these right in here. Okay, so that's kind of how I'm looking to trade this today. And now that I've kind of narrowed down which time frame or now that I've narrowed this down, I'm going to go ahead and just go to a single chart workspace so I can monitor this. Okay, so okay, let's go back to the euro pound. All right. Yep, this looks good to me. Yeah, there's a couple of things, like I said, we've got a lot of good things going on here. If it wants to work out now, I could totally see that. It could be forming a little pennant little pattern there. If that doesn't hold, I'm not too worried because there's a lot of demand right in here that should help us out. So either way, we're good. Like I do feel good about this trade. So, all right, I'm gonna let this one just kind of simmer over here on the side. And in the meantime, let's go ahead and chat about some of our other trades. So unfortunately, I did get stopped out this morning on the NZD CAD. Right here, you guys can see that. I think I have kind of like an idea of what went wrong with this trade. And And I think it's a concept that's worth talking about that will help you guys a ton in your future trades. So this one, and we got a lot of other trades that are moving in the right direction right now. I thought we'd just cover any losers that we have first, and then we can talk about the winners, and then we'll go ahead and take some new trades. So that's kind of how I'm planning the rest of the webinar today is first talk about, let's talk about the trash, right? And what we could have done better there first. Then we'll talk about the good trades, and then we'll talk about new trades that we're going to take today. So we'll just kind of go with that. Okay, so this trade, unfortunately, it had everything pretty much that you'd want to see. So let's kind of break it down. And that's what I was going to say is too, that's one that I had this morning, is even with your best analysis, you're still going to have losing trades, which is why it's so incredibly important to have a stop loss. I know when I was newer to trading, I'd watch some of these YouTube videos where people would say, the banks are stop hunting you. They're going after your stop loss and stuff like that. And there is some truth to that because they are looking for liquidity. It's not that they're looking for specifically your stop loss. They're just looking for liquidity. And so by default, a lot of times they go after your stop loss because that's where liquidity is, but it's not because they're singling you out, if that makes sense. And so one of the things that happens, especially like this happened to me when I was brand new to trading, I would watch these YouTube videos where people would say, oh, they're going after your stop loss. You better not even use a stop loss or something like that. And then my trading just got worse because I just elected not to use a stop loss, right? And so I got in really, really big trouble with my trading at the time because I wouldn't use it. So this is, and anyway, this is a prime example of you do everything right, everything checks out, and you still have a loser, and that's okay, right? Like you have to plan for losing trades. Because it's part of the cost of doing business. I always use that example of, let's say you wanted to open up your own burger restaurant. You can't expect to make, like, by the time your first customer walks into the door, how much money have you spent on that business just to get it started, right? Like somebody walks in and it's your very first customer, they're going to spend $10 or $20, whatever it is, but you've spent, I don't know, I don't even know how much it costs, but I'm sure it wasn't in the hundreds of dollars. It was thousands, tens of thousands, who knows, maybe even hundreds of thousands of dollars just to get started. And here comes somebody with 20 bucks, right, to give you. So that's what I'm saying is, and trading is is very similar. Now, I'm not saying you have to put in $100,000 just to get your 20 bucks out, right? Like, I'm not saying you have to do that, but what you do have to do is you have to plan on these losses, because losses, I don't even want to call them losses. They're expenses. They're expenses to the business. And in order to make profits, you have to have expenses, right? Another example is when I was going to college, I took an accounting class. We did this analysis on Walmart. And Walmart, I don't know if you guys knew this, but they have one of the tightest margins on planet Earth out of the biggest companies out there. So get this, and I literally did this on a balance sheet, looked at the financial statements of Walmart. For every dollar you spend at Walmart, they make less, just barely, well, we'll call it 3 cents. For every dollar you spend, they make 3 cents in net profit. So it costs them 97 cents to get your dollar. Okay. So if you spend $1,000 at Walmart, their net profit is 30 bucks. And that's after all expenses are paid, right? So everyone's paid the product that they purchased that they're reselling to you is paid, and whatever other expenses they have. And so those are some of the tightest margins on earth that we know of that actually makes a profit, right? There's other companies that get in, a dollar comes in and $2 goes out, right? Those are losing companies, and they're ticking time bombs unless they can figure something out soon. We don't want to be that guy. So what we try to do is we say, okay, hey, you know, we win 50% of the time. You know, that's typically our win ratio. We win about 50% of our trades. And, you know, if we can win 2-1, 3-1, 4-1, we'll stay in business if we can maintain that integrity of that uh risk management ratio. But if we lose that, all of a sudden we're not going to be profitable anymore, right? So we have to hang on to that, because if you look at this trade, it almost looks like had we hung on to this one, we might have been okay. But anyway, what I want to do is break this one down. So this one, like I said, is still checked out. Like if you look at the hourly chart, you had a break of structure right here. Here's the structure. The market broke to the upside. You actually had multiple breaks, and then the market pulled back, and you're just having the market pull back into wherever the structure broke, or whatever mechanism created the break of structure, which is this. And unfortunately, this one didn't work out. It's just it happens sometimes, and this one just didn't do what we wanted it to do, and it happens, right? Okay, so that, I think that's the only losing trade that I have over the weekend. We have other trades going on right now. Obviously, our USD CAD trade is still doing great. We've had this one open for like a week and a half, maybe almost 2 weeks now. It's been a great swing trade, right? We've been in it since here, Tuesday, February 21st, and we're now up 119 pips on this trade, and we're still in it, right? It's got another 100 pips to go. And it is the same trade as the one we just took. Like if you want to break it down, let's break down what's required to take the trade, right? So you have the break of structure, right? So first of all, well, actually first, here's the structure. You have resistance, right? Which used to be support right here, used to be support. It was resistance right here. It was support right here. It's definitely a structure point, right? So that's step one, right? Step two is what? You need to find the break, and it broke right here. So you can even highlight it and circle it. This is the break of structure, or BOS, right? Right there, that's where it took place. Then what you're doing is you're looking for the market to pull back into the mechanism, or the thing, that the consolidation that created that break of structure, which technically is this right here, right? Whatever happened in this little area is it. And so if the market ever dips back into that area, that would make for a good buy trade. Now, if you guys remember, this trade, we didn't get in at the most ideal time. It broke out, and then we got in. So we got in right there as it was breaking out, which is still great, not a problem. And now we've just been in profit essentially for the last 2 weeks. It's just been in the money this entire time, right? But this is an example of nearly the same trade. See, what I'm trying to say is, if you follow all 3 steps, yeah, you're going to take really great trades, but there's also going to be trades that just simply don't work, unfortunately. This is one that is working out. If you were to close it now, you'd make 119 pips of profit, right? Obviously, I'm trying to maintain what we said earlier, the integrity of the risk management ratio that we've chosen, which is a 3-to-1. You know, typically we want about a 3-to-1 reward to risk ratio. You know, that's actually, this one's 3.8-to-1, right? And like I said, you can close now. My thing is, I just think if you start cutting into your, not your win-loss ratio, but your average win to average loss ratio, that's the one that really matters to me. If you start cutting into that one, all of a sudden you need so many more wins to make up for any losses that you have, because again, those losses are expenses, and unfortunately you cannot avoid expenses in business. They're just there. Now you can try to do things to mitigate them. Yes, that's what we do. That's why we keep the losses tight. We find strategic areas to put them. So yeah, you can mitigate expenses, but you cannot entirely eliminate them, right? I had to kind of realize that, like when I was a lot younger, you know, when I was 18 starting Forex 10 years ago, I was always looking for that magic bullet. Like, how can I never take a loss ever again? Like that, I literally thought that was possible. I know that sounds crazy now, but I actually thought I was on the quest, I was on a quest like so many other traders are, like, how can I find a magic bullet that just always works without fail? And I always thought it was out there, right? And it's not. But what is out there is consistency. What is out there is mitigating expenses, maximizing profits, business as usual. That's what's possible. And if you're willing to embrace that concept, there's a way. There's definitely a way. That's why I'm holding on to this trade, right? A lot of traders, I feel like, would take a trade like this and say, dang, I'm up 119 pips, I'm booking that profit, right? But I'm telling you, if that's the mentality that you take, over time, it's going to end up burning you. Like, you're going to get burnt out. You're going to take some losing trades, and it's not going to be fun, right? So anyway, like I said, I was just saying, obviously hang on to this trade, hold on to it, because it is a great trade. And we should be able to get to this target up here. And if you guys remember, with this trade, there is a ton of supply up here. We haven't even tapped into it yet. It's pretty much just been demand. See, demand here, demand, 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 demand. And the market just keeps pushing up. So I am expecting a move to the upside still with this. I do think, I'm just telling you now, if you close your trade for profit here in a couple of days, in a week from now, whatever it takes, I'm going to come back and host this webinar and be like, congratulations to everybody that held on to their profits, right? I'm going to do that, and you're going to feel bad. So I don't want you to feel bad. So that's what I'm saying. Hang on to your trade, right? So I want you to be part of that group that's like, yes, I held on, I took that trade and I stayed in there, right? Because, and also, if you look at the current price action of this, guys, there's a lot of reason to be optimistic about this pair right now. So just a couple of things. Now, I don't trade a lot of patterns, as you guys know, but this is a little pattern right here that I've just trained myself to look at. This is a little pennant pattern that's caked into an uptrend, or baked in there, whatever you want to call it. And you're compressing, the market's compressing right now in this consolidation, and ultimately it should lead to a breakout to the upside when that pressure gets released, especially because it's baked into an uptrend. That's why I'm saying, again, that's just another reason why, on top of the fact that there's no supply until up here, right? There's really no supply until you start getting up to the target. It's just demand, demand, demand caked into an uptrend. It's also got a pennant pattern, right? That's what I'm saying. If you if you take your profits, good for you, but you will regret it. So now, for those of you that are new, because I do have several people that have signed up recently, also just want to welcome everybody that is new to the program. I don't know if I said that earlier, but we're super excited that you would come here and join us. I hope you find this to be a fulfilling experience where you can start taking some better trades and learn some real concepts here in the market. But is this too late to take? Could you take this trade? No, you can definitely still take this trade to the target that we're going to up here at 137 300-ish. Yeah, 137 300. Yeah, you can still ride this, but here's the only problem you're going to run into is you're going to just have to have a bigger stop loss. Like, our stop loss at this point is all the way down here, right, at 134 300, which at this point I think I honestly should just bring to break even. In fact, I'm going to do that. I'm actually just going to bring that to break even. So what you could do is put your stop loss. You could, yeah, there we go. That's fine. You could put your stop loss where our break even is right here. So you'd have a 1-to-1 reward to risk ratio, which isn't entirely a bad thing. I just don't prefer. In fact, I just don't take 1-to-1s anymore. It's just my personal preference. It's just part of my business strategy that I don't take 1-to-1 reward to risk ratios anymore. I used to. In fact, I used to do the opposite. I used to do, 1-to-2, 1-to-3. So what that means is, for every dollar I get, I risked $3 to get $1, and that used to be how I traded. And that obviously I don't do that anymore. So if it's in your business strategy to take a 1-to-1 reward to risk ratio, then go ahead. But if it's not, then obviously just wait till we take the next trade, which we should hop into some more trades here today. We'll get to that in just a moment. I'm just recapping the trades that we have open right now. That's all I'm doing. Okay. So yeah, if you are new, you can still take this the rest of the way with us. I'm just saying that you're not going to have the same reward to risk ratio as we did when we started this 2 weeks or a week and a half ago. All right. Anyway, so that's our kind of like highlight trade. It's up nearly 120 pips right now, and I'm just super elated. And it's got another, just over 100 pips to go. So it's going to be a monster trade. It already has been, and I'm just excited to continue to see it move. All right, guys. So in terms of other trades, we have this CAD Frank short that actually hasn't triggered. I'm kind of sad because obviously, look, it would have been great. You can see here this market, or I guess last week came all the way up to here and then just pulled right back, right? Like 80, 90 pips. And it got within, oh boy, it got within like 11 pips of triggering, maybe 12 pips of triggering. And then it just went straight down. So obviously we were in the right direction. We just didn't get in time, you know. And at this point it's gone down so far. I don't know if it's worth keeping that order. So I think I'm going to just close that one. Let me go ahead and do that right now. Because it's just not worth keeping at this point. It's too far away. When it was closer to up here, it was like, oh yeah, let's definitely keep it open because it's close to triggering, but it just never triggered. So I think you can close this one. If the market comes back up here again and retests this zone, I might replace this trade, but it's just too far away at this point. So there's no need in holding this one. No loss, no win. It's just a no trade. Nothing happened, right? And I'm not interested in buying this one either, just because, as you guys know, if you look at retail sentiment, in fact, let's take a look. A1 trading retail sentiment. You guys can see this right here. As you guys know, the CAD franc is extremely bought right now. It's like one of the most bought currencies in this market. It might be the most bought currency. Let's take a look. They revamped their website. So let me see if I can get this figured out. It just shows the majors. I was able to figure this out the other day. Let's see. Here we go. Okay, here we go. Yeah. Yep. It is the most bought currency right now. Look at this. By retail traders, 96% of retail traders are buying the CAD franc right now, and only 4% are shorting. That is absolutely crazy, guys. Insane. So, and it's just as we would expect, right? Just as you would expect. Okay. The market's plummeting. So what's the retail trader going to do? They're going to try to find the bottom. So of course they're going to start buying this, right? But the thing is, they were buying this thing even when it was up here. So, in my opinion, it's their loss. Their loss for buying when it was all the way up here. And now it's come back down to here. I'm just sad that we didn't grab this. We were like 10 pips away from triggering. Anyway, we'll find another good trade. But I don't have any intention to buy or sell this one, especially I'm not buying this whatsoever. If the retail traders are buying this so much, I'm not interested at all. But I would be interested in selling this again, but I need to wait for a good price to do it. And honestly, I'm not interested in selling unless it got back up to the area that we wanted, which is like 100 pips away. So anyway, I'm just going to wait. Just going to wait on that. Okay, so other trades. Oh yeah, we have this Kiwi dollar. I think this one triggered recently. Yep, it has triggered. So let's break down this trade. This is a little bit of a riskier setup because the liquidity here is not as big, right? It's just basically a single candlestick. But so far it's held up. At one point this morning, it triggered and we were up like 15 or 16 pips. And now I think I'm down 4 or 5 pips on this trade. So this one, yeah, I'm just being patient on it at the moment. But it's basically what you want to see. So let's break it down. So the first thing is identifying where structure is, right? So you've got major support right here, resistance right here. It also is support for this back here. If you go even further back, kind of support there, not so much, but it doesn't even matter if it goes back further. All we need to know is that it was support right here and it was resistance right here. So right here, and this is step 2, is the break of structure. So the BOS. And we certainly had it in a big way. So it broke this level without regard. And it also broke some resistance up here too. So it just went boom, 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 boom. It just went straight up. Okay. Now the market has been pulling back. And so we saw this as an opportunity on Friday. You can actually go back to our class on Friday morning if you wanted to see us kind of look at this analysis before this even happened. But basically this market, this Kiwi dollar was pulling back and it wasn't quite at a good buying price for us. You know, for me, the buying area is this, right? I'm looking for the market to come into liquidity, which is this area right here. And why is this liquidity? Let's talk about a couple of reasons why this is liquidity. So this is liquidity because, again, this is the consolidation or the last, you can even just count it as the last candle before a major up move. Now, it's not just a major up move. I see trading coaches do this all the time, and I don't think it's smart. They'll just say, oh, put a buy or sell order around the last candle before a major up or down move. I don't think it's that simple. For me, I mean, I get what they're saying because I trade the same concept, but to me, you need to trade the liquidity that's associated specifically with a break of structure. Okay. I don't think the other ones are worth trading long term. I think there's too much supply, there's too much demand out there, there's too many zones you could get confused with. So the only ones I'm willing to trade in my business plan is the ones that are associated with the break of structure. So this one is definitely associated with a break of structure. That's why I like this area. Okay. But if you pull up Sonar Lab, look at this. There's one right here. There's a supply block here, and there's one here, and there's demand down here. Again, the only one I care about is this one, and you can see it's like Sonar Lab is saying that this is a demand area, and I agree. But that's the only one I care about, really. I mean, there's other ones that maybe I care about, but maybe for taking profits, I'm okay with. But as far as entering the trade, let's put it this way too. There's a saying in real estate. In real estate, they say the money is made on the buy. I'm probably botching it just because I haven't been in real estate in a while. But I used to, for some of you guys know me that but before I really got in big into my trading, I did real estate, I did mortgages and stuff like that for a while. So I worked with a lot of realtors, but they always say, you know, you're trying to make your money on the buy. Okay. What this means is if you buy something that's worthwhile, if you get a good deal on something, it should be easily sold when it's renovated. Let's say you buy a house that you're going to fix and flip and try to make a profit on it. You know, a lot of people do that. They'll buy a house for, 300,000 and then fix it up and try to sell it for 400 or something like that. That's a classic fix and flip type of thing, right? So what I'm trying to do is bring that same concept into Forex here and into our trading. Is the money that we're going to make on this trade is on how well we execute our buy position, because there's actually going to be a ton of different places where you can close your trade. There's a ton of different supply and demand zones where you can take profits, but there's not as many great areas where you can buy or sell and have a really tight stop loss, right? And when I say really tight, stop loss. I'm just saying an appropriate stop loss, like something where you can mitigate that risk as much as possible. So that's something that I've learned is the better the entry that you can take, the better the entry and the tighter the stop, the more money you'll make on the sell, the when you close that trade. So really your entry to me is like everything, because again, there's going to be tons of places where you can get out of the trade. So that's the concept I'm basically saying is if you do your research in the beginning, like if you're going to go buy a real estate property and you do your research in the beginning and you make sure that that is exactly what you want, you can mess up the sell, you can mess up the take profit, and you'll still be fine. But a lot of people, what they do is they'll just take any deal that comes along. Same thing with Forex. They'll just take any deal that comes. And, then all of a sudden you have profit taking problems because it's not as good of a trade as you thought it was going to be. This is a good trade. The only thing I don't like about this trade, and by the way, there's things that I do like and don't like about every single trade we take. So just because I say something that I don't like doesn't mean that I think it's not worth taking. Obviously, I've put money on this trade, like real money I've put on this trade, and I've put you guys into this trade too. So I wouldn't take it unless I felt like it was worth taking, right? But I'm always critiquing every single trade that I take, no matter if it's a good or a bad one, right? So with this one, the only thing I don't like is I wish that this liquidity zone was bigger. I wish there was more liquidity here. I wish there was more volume in this area. You can actually use an indicator called volume profile to find out if there's a good amount of volume in that area. Here, just go to indicators on TradingView and search volume profile. I like this one by KV4 Coins. You just click on it and then it'll show up on your chart. So here's a volume profile. You'll note right here in this liquidity zone that I've drawn out, there's not a lot of volume in this area, okay, until maybe like just below it actually. So there's a chance actually that maybe it comes, because let's put it this way, the market likes to float to volume. Doesn't always happen like this, but it likes to go to where volume's at. So there's volume up here. That makes sense because there was a lot of activity for a long time, a lot of consolidation that took place in there. Looks like there's some significant volume in here. So the market likes to float to this volume stuff, right? And my big concern is that there wasn't a lot of volume where liquidity is located. Okay. So it makes me think that this could basically do what the NZD CAD did if we're not careful, is it could go just below this and then come up. This one though is kind of confusing because if you look at it, you can see that there actually was quite a bit of volume around the demand. So I'm actually kind of surprised that that one didn't work out, but nonetheless, such is life. You just have to live with that. You can't win every single trade. And if you try, that's the thing. If you try to win every single trade, you will wind up being unprofitable. Okay. So, and I know this from experience, guys. And I'm going to repeat that again. If you try to win every single trade, you will be unprofitable. Okay. You basically, we have to learn how to cut a loser. You have to learn how to cut a loser and move on to the next trade. Not just a loser. You have to cut like a lot of losers. Like I said, I only win 50% of the time. 50% of my trades win. So that might sound like not a good deal, but that's not all the story, right? Again, my business plan is, hey, if I can try to win 50% of the time, but I'm winning 3 times the amount that I'm losing, then I'm a good trader, right? Therefore profit and all that kind of stuff. All right, so this one triggered recently. It looks like it actually it drew down for a little bit, like it drew down about 14 or 15 pips, and then now we're back to break even on this trade. So we're basically where we started. I think it's, like I said, I think it's definitely still worth staying in. The only thing I just don't like is I wish that this liquidity zone was a little bit, I wish the market created a little bit of a more broader liquidity zone, which we don't have on this one, but it meets all the requirements, right? It's got the structure, the break of structure, the liquidity that created it, and now you're just looking for the market to break out from here. Okay. So anyway, otherwise, it's like I said, it is a good trade. It is a good position. All right. Anything else? I actually have a side trade that I took. I don't know if it's worth staying in though. I have the same concern with this one as I do with the NZD CAD or NZD dollar. Is here you are on this NZD or pound NZD. This is not a signal I posted. It's just a trade that well, I have it open over here, but I'm thinking about closing this one because it's basically the same trade as the NZD dollar. What I don't like about this one, in fact, I think I'm going to close it. Yeah. What I don't like about this one is it came up to liquidity. It came up to supply, pulled back, which is good, but now it's right back at it. It's testing it yet again. It's right back. It's right here again. And that's not a good sign. You don't want the market to hang out at supply. You don't want it to hang out at demand. If it's hanging out in these areas, that means it's not really, it doesn't consider this as an imbalance. If it were an imbalance, it would just come up to this area and immediately pull back. But obviously the market doesn't feel that way. And so this is one of those things where what's nice is I can cut this trade now and only lose about 8 or 9 pips on this trade instead of losing 60. Right? So should I buy? Should I buy then if this market, if I think it's going to go up a little more, or if I don't think it's going to go down? I don't know if it's really worth any trade, really, guys, because yes, you have the break of structure right here. Here's structure. Here's the break of it. This is kind of the thing that created it. But it's not doing very well. Again, had this market come up to my order, which it did, at one point I was up about 60 pips on this trade last night, or a couple hours ago. I was up about 60 pips on this trade. And now we've come in the last 2 hours back to where I started. And now it's just kind of hanging out up here. Not a good sign. Okay. So we need to recognize these signs like as soon as we can. Like if we can recognize this kind of stuff, this phenomenon, it'll save us from losing on a lot of other trades. Okay. To protect our capital a little bit more. But you can see it worked out for the first little bit, right? Like it, this trade basically went right to my entry and almost immediately started pulling in my favor 60 pips this morning. And now it's right back to where I started and actually gone a little bit beyond it. And I've just learned to almost like swallow the pride and just say, okay, yeah, this one doesn't look good anymore. And just be able to have these objective eyes, forget the subjectivity, forget the feelings, and just stop feeling and just be like, okay, yeah, it had what I wanted before, now it doesn't. Okay, I'm out. Just don't try to marry a trade. Just get out. Just move on to the next one, right? Okay, one second. In fact, got this on another account. I need to close this one. I don't want to marry a trade that doesn't look like, I think we talked about this one last week as a potential trade opportunity. And sure, it started working out for the first little bit, but now it doesn't look like it's got what we need anymore. And another thing too, does it have the volume profile? Not really. Look at this supply area, right? Like it doesn't have a lot of volume there, right? So just another little thing to pay attention to, that can give you a clue as to what's going on. Okay, so let's look for some other trades. Okay, so at this point, I think we've covered everything we have open. Let me double check. Let me check here. Okay, we talked about the Kiwi CAD, yeah. Talked about, or Kiwi dollar. We talked about the dollar CAD, which is our best trade. Talked about this one. Okay, yeah, I think that's everything. And like I said, I've closed the CAD franc because the market's too far away from our entry, so there's no use in holding it. And then so it's just dollar CAD and it's just Kiwi dollar that we're holding. That's it. Just those two trades. That is it. Okay. And now we'll look for some other opportunities. So when I'm looking for opportunities, guys, what I do is I like to go see what sentiment is doing, just to kind of get an idea of where the market is. That's all this is all about. So when you look at things like the CAD franc and you see such an overwhelming amount of traders buying, what that means is the market is going down. Okay. It's going down because retail traders are trying to find the bottom of the market. And so they like to buy because they're like, "Ooh, I want to be the first person to the bottom," which is what we want to do too. We just have a different approach of how we do this. We don't just simply buy because the market's going down. We don't sell just because the market's going up. We look for specific areas where that's likely to take place. Like we look for zones, we look for supply demand to kind of tell us where that's going to be. And not just supply demand, specifically in the way we trade, we're trying to find supply and demand that's associated with a break of structure. And that's where we're looking for the market to reverse, is at one of those types of things. So when I'm looking at the CAD franc or the Aussie franc, I'm thinking, okay, those markets are going to be down. I'm going to be looking for sells, but I need the market to come up to an area where a sell would make sense. Okay. Let me look at, 1 second. Okay. So let me look at the Kiwi yen. I've looked at some of these others already and I didn't really like them. So let me look at the Kiwi yen. Let's see what that one looks like real quick. So yeah, a lot of retail traders are buying this right now. So what we want to do is look for areas where sells make sense, but you want to look for a break of structure. So where is structure? Oops, this thing's not working. That's fine. This one's hard to navigate. I would say there's definitely some support right there. So you could look for some supply up in here. But I don't see anything else that's really, really good. You could argue that this is a support resistance area. So there could be something right in here that might be worth selling if the market got up to there. Let's see what SonarLab's saying. SonarLab's saying there's something here, but nothing here where I'm thinking. So I might actually ignore this one. Plus, it's not very obvious to me. So I just move on if I don't like it. I just move on to the very next one. Yeah, let's actually look at the Aussie dollar. Let's see if there's a sell opportunity there. Okay, yeah. So a couple of things with this one. This is an hourly chart. Market's pulling down. Most retail traders are what? Retail traders are 74% long and 26% short. So a very strong bias to the long side, which means we want to be looking for shorts if we can. And also, this is just a fun little pattern, just for your gee whiz. This is a bear flag. So the market's coming down. This is the flag pull, and this is the flag right here. And usually these markets wind up going to the downside even more. So that makes sense, right? Okay. Now, where could we do this? You can use SonarLab to find where the supplies are. There's actually quite a bit of demand here. Wow. But there's a lot of supply up here. Makes sense. Okay, it's not going to be super helpful though. So let's see where the breaks of structure are. It's definitely, there was definitely a support resistance area right there. Unfortunately, the market's already tapped into that imbalance, right? So I would argue that whatever happened in this little area is kind of supply, and the market filled that imbalance when it came back up to here. And once it filled that, that's when the market just plummeted after the fact, right? So that opportunity's kind of gone. And it kind of looks like there was even a little bit of a supply going on. I'll circle it like right here. And it almost looks like this move filled that imbalance. So this may be just on its way down. Like it may have already filled any imbalance. So might be, I don't know. What I'm trying to say is there might be an opportunity for us to get in on this, even just at a market order. Maybe we don't have to wait. There's quite a bit of demand back here. But the next real demand isn't until, in my opinion, isn't until like this right here, because whatever happened here is kind of what led to the market breakout of this structure point right here. So that would be the real demand to me, which if this market could, then you could see the Aussie dollar go all the way down here. There is some news, I think, today on the Aussie dollar. Let me double check. So that could affect some things, but let's just take a quick look. Yeah, so they have their rate statement tonight. Yeah, I thought I remembered seeing something there. So, I mean, it could, we could see this thing go down for sure. But I don't know if it's worth risking through the news event. I just feel like there's tons of other ways to make money. I don't need the news to make money. But nonetheless, it does look like, I'm just going to put it in simplest terms. Like I do, from the way this is looking, guys, I would not want to be a buyer. You do not want to be a buyer on the Aussie dollar right now. Okay. I mean, I'm just the price action doesn't look that way. I mean, you've got a flag pattern. Every time it comes up to a supply, it mitigates and then goes down. Those are clues that we should be looking for, right? So I don't even know if I will trade it because there's a lot of news coming up, but if I were to trade it, I'd be looking for shorts just based off of how I view the price action and how I'm viewing the retail traders right now. Right. And I don't think the big banks would let the retail traders win this. Right. If 75% of retail traders are buyers, I don't think they're going to let them win that overall. So there might be a few moves to the upside, but ultimately I think its fate is down again. Right. Okay. Anyway, let's look at some other trades. Let's look for some other trades here. Let's go to back here. I want to look at some of these long opportunities. So the Euro Aussie probably is going up a lot today. Let's see what see if it's doing it. Sure enough, it's going up a lot. So, and it just recently broke this structure component right here. So we'd want to look for buys. For me, I would generally say that whatever took place in here makes sense for buy opportunities because that's probably what created that move to the upside. My guess is that the volume profile also says there's quite a bit of volume there. So that would be a good area if you could get the market to pull back into that. And yes, we are breaking structure level after structure level to the upside. So to me, it makes sense to look for buys, right? All right. Anyway, so I might do a trade there. Let's go take a look at some others. Euro Kiwi is also moving up. Let's take a look at that one. It's got a structure up there that hasn't broken yet. We'll see if it does it, but it does have a break of structure right here. So you definitely could say this right here might be a good demand area. Let's see. I'm still trying to find some other really good an opportunity that I'm really excited about because that one it just didn't have the break that I like to see with the very kind of like obvious demand. It just didn't have it. USD CAD, look at that. Most people are short, 16% are long. Yeah, we're gonna do great on this trade. Continue to hold that USD CAD. We already talked about it. We're already in it. Just continue to hold. It's gonna be a great little trade. Frank Yen. Oh yeah, it's a trade we took last week or a couple weeks ago. We got out of it though. I'm kind of sad actually we got out of this one early, but at the same time, in hindsight, I guess I just didn't know. But yeah, looking for long positions on here would make sense. Okay, couple of things on here. Let me delete all this stuff. So this is kind of an obvious demand area. The problem is though, is that one associated with a break of structure? Not yet. Like let's say this market keeps going up and it breaks this, if it breaks this resistance here and it just keeps going up, then yes, I would be excited to buy there if it pulled back into that. But right now I'm not. I wouldn't look for a buy there just because I need the market to break some structure first. Okay, I only trade the ones that break structure. Okay. Oops, let me do that. So I'll just keep an eye out on that one. Nothing else I can do. I'm just keeping an eye out. Pound Kiwi. It's funny because I closed a short on that one, if you guys remember, just a few moments ago. So at this point, we would want to look for long positions on that one because it's definitely switched to retail trading bias. The retail trading bias is to a lot of retail traders are selling this right now. So where would a good buy be on this? Again, you want to find breaks of structure. There's just not a lot of structure though on this one. It's just a lot of back and forth. This is probably some support or resistance right there. So maybe, but I'd need to pull back quite a bit. See, that's what I'm saying, that not every single currency pair has the opportunity we want, or not everything we look at is going to have an opportunity. That's what I'm trying to say. Okay, and you just keep looking for other options. The euro pound actually, which is one we're in right now on the banker's close, but I am looking for long positions actively on this one. And yeah, you want to find, step one is what? Look for the structure and then find the break. This one has structure right here. You can see it used to be resistance here, support here, resistance here, and then it ultimately just broke just recently this morning. So yeah, if I could get this euro pound to pull back into this area, then yeah, I'd love to buy that because that one broke structure. And you can see that break pretty obvious here. That is the break. And this is what caused it. And that's where we want to buy if the market can come back. Yeah, so if the market could come back into this, if it pulled back 26 pips, you better believe I'm buying that, right? Definitely going to buy that if that pulls back into there. I mean, it's still a buy opportunity right now, even so, like for banker's close, obviously we're buying this right now, but I mean, it could just keep going straight up, who knows? And we missed this opportunity, and that's fine. I'd rather miss a trade than lose on a trade, right? But yeah, if this pulled back 25 pips into here, I would love to take a buy. So I might post that one. This is actually one I might post because it's a little more obvious. It makes a little bit more sense. Yeah. Yeah, it's definitely, you go back in time, you can see that that's been an area that's been pretty well respected, generally speaking, in the past, definitely recently. So yeah, I'll probably post that as an opportunity. And I'll still look for some more, and I'll post some more as I see them. As I see more opportunities, I'll just post them. But yeah, let me go ahead and recap. So yeah, I'll post a few more trades, but just continue to hold this USD CAD long position that we have. I brought my stop loss to break even on that one. We've got this Kiwi dollar long position now, which is actually now turned positive, which is good. So we're now making money on this trade, which is great. So we're now positive on this one. Not a lot, but yeah, we are starting to make money on this trade that we posted on Friday. And then, like I said, I'm going to look for some more trades to post in addition to what we've already got. But yeah, and if you guys see something too, some of you have taken me up on this, but text me on Telegram. You guys, all you have to do is just go find my profile on Telegram, like just literally send me a message on Telegram, send a screenshot of what you're looking at. Maybe do an analysis similar to what I've done here, where you look for the structure, look for the break of structure, identify liquidity, and then place a trade based off of what you've done here. If you want to send me a screenshot of what you guys find, I would love to just be part of your analysis. Plus it helps you and it helps me. We just trade better together. So if you see something like this on your own, mark it up, send me a screenshot of your markup and we'll talk about it. So, all right, guys, appreciate your attendance today. Thanks for coming and we'll see you in the next webinar.